Welcome to Retirement with Jim. So, today, is insurance robbing you? So before we get started, if you like my channel, please consider hitting the like on the video and subscribe to my channel. It helps my channel grow. So with that, let's get started. So, is your insurance robbing you? So between homeowners, car insurance, medical insurance, HOA costs, fixed costs in retirement that have for a long time been a very staple of what you have. You have your cost and they rise with moderation. They rise maybe slightly up, in keeping pace with inflation, but no dramatic increases. And certainly when you get into retirement, you want a fixed, rate. You want a fixed amount of money that on certain things you're just going to stay steady at and pay and not cost you an arm and a leg. So let's start with homeowners insurance. Homeowners insurance is up between 8 and 10.5% this year. An average annual cost of $3,500 or higher. So that goes along with what they call high-risk areas. High-risk areas are anywhere from 21 to 27% of an increase in their premiums. High-risk areas are in Texas, California, Louisiana, Florida, Colorado, for the most part. They cite rebuilding costs, the high cost of labor, and the high cost of materials, and of course they say that all of this is due to inflation. The high cost of the high cost of inflation is also tied to, in many cases, the tariffs now. So the materials are costing tremendously more. It's just one of those things that from your homeowner's policy, you really have to look at it. And so it really kind of begs the question, where are you at with your homeowner's policy? Are you comfortable with it? Are you feeling like you're getting a fair break from your insurance company? Or with an 8 to 10% increase, are you suddenly going, oh my God, I'm really getting priced out of the market? So you have to ask yourself, where do you fit in? So next up on the list is car insurance. Now, car insurance, an average monthly payment for car insurance is about $200. Annually, it's anywhere between $2,300 to $2,700 a year, annually. Now, they're citing increased repair costs, more accidents, inflation, higher theft rates, poor driving record, and many more younger drivers, inexperienced drivers, not to knock the group, but they just don't have the experience. So more bad drivers on the road. And I know that I live in the Phoenix area. I can say that, driving, you really got to be defensive out there. People are a little bit crazy, too aggressive. They are just right on you. You got to be careful at the red lights because there's a tremendous amount of people who just simply disregard them, at least in this area. So from a driving perspective, I've seen a lot worse driving habits in the last, I'm going to say 5 years, than I've seen in my entire lifetime. Just absolutely insane. And so a lot of that is, the cost of relating to the cost of higher, car insurance. Now, many of us, we bundle our insurance with our homeowner's policy or a renter policy to be able to get a discount. I have Allstate. I was a State Farm person for, decades, 30 plus years, switched to Allstate because the premiums just kept going up, uncontrollably up. And we bundled with our homeowners, and but we just still couldn't manage to keep it reasonable. Now we have Allstate now, and we have a DriveWise program that you can get on your app, and it tracks your driving habits. Now, for some people, I'm certainly sure they wouldn't want that. They wouldn't want to know from anybody how they drive. I'm older. I'm now more conservative. And at first I used to look at the app all the time. Now I don't even think about it at all. It just tracks how you're driving. Your speed. Are you staying within, the limits? And they know from a GPS standpoint where you're at. So it's like from an information standpoint, yeah, they are tracking you. But if you can get a discount from it, then why not? We get an annual discount of like $200 off our off our car insurance policy. And it's well worth the $200. It's certainly something, if you haven't looked into it, it's certainly something to consider. And if you're not worried about Big Brother so much, and it's just putting more money in your pocket, well, then there you go. That's the goal. So next up on the list is medical insurance. The rising cost of medical insurance they say, the insurance companies, is rising cost for medical service, pharmaceuticals, specialized care, along with provider and insurer consolidation. A lot of the insurance companies are really marrying up with the doctors and doctor groups so that they really have cutting other networks and other doctors out of their networks to reduce the amount of availability. So they have tighter control over all of their costs. They're also, the high administration costs. Medicare is up 10% over last year. And the drug prices are going up, and they're citing, the drug prices, the aging population. On the drug prices, for instance, my Medicare Part D plan was going up $600 a year. And I was like, I don't want to do that. I can't do that. I can't just ignore that. So it caused me to go shopping and spent a lot of time researching, and finally found one that gave me the same drug access and the same pharmaceuticals that I need, that I use, and gave it to me for free. I'm like, okay, no, after I'll see after a year if I'm still liking what I chose. But I guess one of the things that happens is it's causing you to look, insurance as a whole is causing you to look at what you're paying and considering, okay, I got to shop the market. I got to figure out, am I getting the best deal? Can I get a better deal? Insurance used to be that thing that we would get, and it was kind of forgotten, a one and done. And especially once you're retired, you're kind of like, man, you don't want to think about the cost. It should stay comfortable, reasonable, and you don't want to have to spend time shopping around finding, new insurance. But the new reality is, if you don't go out there, you don't shop it, you don't figure out what you need, it's going to cost you a whole lot more money. And so you're forced to kind of into the new reality of, this is something I have to review and stay on top of if I don't want it to cost me a left lung. It's just an arm and a leg is what they're taking. They're taking bit by bit from you. Next thing on my list of fixed items is HOAs. Now, I live in the Phoenix area. I live where I have an HOA. I know not all of you do. But HOA costs have gone up on an average of 14%. They're typically 3 to 5% running with inflation. But they're stating that underfunded reserves, higher insurance costs, and inflation is causing them to raise their monthly payments. So for many people, HOAs are the reality of that they deal with. They are for me and my wife. We have one, and I do like it, for the most part. But HOAs are a fixed cost, and you don't have any control over it. Insurance, you can go out shopping and go to another carrier, try to do the best to keep your cost under control. HOAs, what are you going to do? Go out and sell your house next week because your prices went up? No. So the reality is, how do you stay ahead of that? Well, how involved are you? Are you going to meetings? Are you asking for an accounting of what the increases are for and where are you spending that money? Are they doing really a good job? Is the board that's managing that really got all of the homeowners' best interest at heart? And or is it just for a few? So you really have to go, where is my money being spent, and be willing to be active enough and ask questions to be able to say, am I getting the most from my dollar? Excuse me. Fixed cost in retirement has always been a staple you could rely on. But that's the past. It's the new reality is they are increasing their premiums, whether it's insurance, HOAs, the cost of fixed, rates are a thing of the past. In some cases they're going up not just annually, but semi-annually. My HOA went up twice this year, which I was shocked at. I didn't realize that. It's like, okay, I thought maybe it was only a once a year thing. I was unpleasantly surprised by what happened there. So it kind of begs the question, what are you doing? Are you doing something to stay actively involved? So what is your experience? So let me know in the comments below what you feel is the good and bad of insurance. So with that, I'm going to tell you have a great day, and I will see you in the next one.